Well, thanks so much for tuning in to India Market Wrap right here on NDTV Profit. And it's turned out to be an okay day of trade. I mean, frankly, if you look at the Nifty IT, you would be spoiled to believe that things are looking hunky-dory. If you look at maybe the banks or some of the other indices, metals in particular, things are all right. And we'll talk about some of that as well. In the meanwhile, just before we get to specific stocks, HAL numbers on your screen as well. Have to admit, independent of what the expectations were, considering what some of the other PSUs have done, these numbers don't look all that bad. They're not great. They're not setting the stage on fire, but not that bad, at least on the reportage front. Meanwhile, red tape numbers are out as well, 34% lower. So earnings pulling in thick and fast amongst the last couple of days before the numbers result season ends. But very quickly, what's happening on the large cap end of the market is interesting because one, HDFC Bank is not correcting the way it did in trade yesterday, which is actually a good sign. So that's part one of the conversation. Metals continue to take it on the chin today as well, or right now as well. So yes, some of them may have recovered a bit of lost ground, but still the metal index per se looking a bit jaded. And stocks like Divi's Lab, because of an earlier than expected launch of a competitor product, or a Hero MotoCorp, or an Ultratech, Adani Enterprises, Dr. Reddy's, seemingly under a bit of pressure in the session today. Very quickly on the gaining side, it's IT, TCS, HCL, Infosys. I think to our experts, we'll try and figure out what to do with some of those IT names. But Hersh, what about the broader end of the spectrum?
Well, some real movers on the broader end of the spectrum, Niraj. You're seeing a Marksans Pharma up 14.5% on the back of numbers. Very strong. EPL as well, doing very well, 11% or so higher on specific names. SJVN doing well as well, 4% higher. Nykaa, again on the back of numbers, 3+%. Astra Micro are some of the other ones which are doing fairly well in trade. Among the losers, Piramal Enterprises leads the pack, very strong growth, but nonetheless the numbers disappoint overall. HEG down 7% odd. Landmark Cars 6% lower. We had some adverse impact last quarter as well as this quarter that's been carried forward. Of course, some commentary also coming in for Landmark Cars, which has not aided the returns, at least, that we are seeing intraday in trade today. Ahluwalia Contracts, again, very poor execution, 5% lower. Valor Estate down 4%. Texmaco Rail down 4%. So some of these railway counters taking it on the chin, especially in this quarter. Post numbers, we saw very similar reaction on RVNL as well. Eclercs also down roughly 4 almost 3+%. And Hero Moto, the top loser, especially within the Nifty 50 counters, on the back of those numbers. 3.5% lower is where Hero Moto currently trades at. Let's pull up some gold financiers, see where those ones are trading. Manappuram Muthoot, those also came out with numbers and it came out with a good set, especially on the growth front, but nonetheless the markets as such, as well as the street, not too excited about them. Manappuram, of course, slightly more impacted than Muthoot in terms of intraday returns. So those two also in focus. Outside of that, let's pull up the metals pack because that one definitely buzzing today on the back of all the developments coming through. And of course, it's been a recovery of sorts to a certain extent. So honestly, nothing much to complain about even when I'm looking at it over the intraday picture. When I'm also looking at the broader end of the spectrum, let's pull up the advanced decline before we go across taken views. The advanced decline continues to be quite wide in that sense, nearly 2:1 in favor of the decline. So the breadth of the market is weak overall, despite the Nifty 50 not indicating it as such. And you're also seeing declines on both the mid cap as well as the small cap indices. The Nifty mid cap down around 0.6% has held down to those kinds of losses pretty much through the day, and a very similar cut on the Nifty small cap as well. But let me quickly go across to Ruchit Jain.
Before you do that, Hersh,
sure.
Mazgon Doc numbers on your screen. So numbers are coming in thick and fast. Just a quick update there because revenues are up about 8%, but I think the EBITDA margin expansion must be significant because we're seeing a significant jump in net profits. So I'm just waiting to look at the EBITDA margin numbers because it has to be an operational performance beat for the bottom line numbers, or unless there are one-offs, of course, but maybe there are operational beat for the bottom line numbers to be so much better than what the the top line number is. Okay, those numbers on your screen and the stock is duly reacting. Richard Jain, CMT lead analyst at 5 Paisa with us on the show on the technicals. Richard, good having you. Thanks for joining in. Just starting off, I know it's difficult to give trades on stocks which have just come out with numbers and there might be a flash rise, but Mazgon certainly seeing that. Just wondering, what do the Mazgons, the HALs of the world look like on the charts, Richard? Let's start with that first.
Yeah, very good afternoon, Niraj. So, Niraj, if you see last, I think 2 or 3 weeks, the stocks have already seen a good correction from their recent swing highs. And both the stocks, Mazgaon Dow as well as HAL, both are trading around their 50-day exponential moving average, and that average support has not been breached. In corrections, in the past corrections as well. So I think the risk-reward ratio is a bit favorable if anyone wants to take a contra trades over here. Definitely result-based volatility is there. So need to keep your stop losses in place. But the risk-reward ratio, I think over here, especially in HL, if you see, is quite good over here. So even if one is looking for fresh buying within this space, then HL looks good at current levels, keeping stop loss below 4,480, which is the swing low. And we can expect a pullback back towards that 4,900 to 5,000 kind of range.
The HAL numbers coming in, a very strong beat coming through. Mazgon Doc numbers. I stand corrected there. 491 crore was the expectation. Bloomberg consensus. It's come in at 696 crore rupees, the net profit. So clearly a very solid beat operationally. I think the margins have also come in 25% plus. Just doing back of the envelope math. And it seems that the margin number also is quite strong. So just waiting and watching. 14.3% was the margin estimate. And that one flying away in trade. Let's pull up the intraday chart on Mazgon Doc, see the reaction on the stock as well. Because it's a very solid number. There you go. You can see the spike on the stock price. 3.5% higher on the back of that very, very strong number that it has posted. Let's quickly move on. Rochit, should we probably try and look at how you are viewing the Nifty today? There's been some bit of weakness that has been built in. Do you expect a prolonged consolidation before we move higher or lower for that matter?
So markets no doubt are in a corrective phase, although there's no change in the long-term trend. But in the short term, I think that lack of buying interest is leading to this consolidation or correction. If you look at the FNO data, especially in the index future segment, FIs have long-short ratio of about 48% as on yesterday, quite close to that neutral mark of 50%. Even the client section, which includes the retail traders and the HNIs, they have long-short ratio of around 54%. So what we can see is there is no build-up of no aggressive position for a directional trade. Neither there are too much shorts getting formed, nor no much long addition is there. So I think because of lack of buying interest, we are witnessing that the markets are continuing its consolidation phase. I think until we see the index surpassing above the 24,400 to 450 range, which is the recent swing high of this last 7-8 days consolidation, I think the broader sense for the short term would remain a bit on the negative side. 23,900 would be the important support to watch out, which if broken, then I think there could be some more retracements towards 23,650, which is the 38.2% retracement from the elections day low. So I think we are advising our clients to stay a bit light on positions since there are no signs of a resumption of the uptrend in the near term. Until we get the index surpassing 24,400 mark, it's better to be on the sidelines where some correction could still be expected.
Okay. Rachit, what about ideas for this afternoon?
So a couple of ideas, one long and one short would be the trade setups, considering the market scenarios. On the long side, I would recommend going long on Titan. Looking at such stocks which have already corrected before the markets, Titan is one such name where after February, we have not seen any kind of up move in spite of markets making new high. And I think in this entire corrective phase, the stock has now taken support around its weekly 40 EMA. So I think the downside here seems to be quite limited in Titan. So at current levels, one can go long with stock below 3,300, expecting a pullback, slow and gradual pullback move towards 3,600 again. And RBL Bank is looking weak, where we would advise taking short positions. So ideally, if you look at the private sector banks, in fact, the entire banking segment has been showing a relative underperformance in this market. And RBL Bank has been forming a low top, low bottom structure. The prices have breached its previous swing lows as well. So here I think the correction could have extended towards 196 where next major support is placed. So one can go short over here, keeping stop loss about 212 for possible targets around 196.
Wow, 4% low on RBL and further, Ruchit suggesting a short. Ruchit, what's the sense with regard to some of the IT stocks? Today, that's the one area which is doing well in trade.
So IT has been more reacting to what we saw in Nasdaq yesterday. But if I look at the positional trade, then I think although mid to long term trend remains positive, in the near term, I think the movement would be more seen based on the global markets moves only. The Nifty IT index has managed to form a support around the 38,000 mark, which was the previous resistance level, now acting as a support. So till the index is sustaining about the 38,000 mark, I think the price-wise correction seems to be limited from here on. There could be some time-wise corrective phase where a broad range from 38,000 to 40,500, the index could oscillate within this range. But yes, if the index stays about the 38,000, I think the downside could be limited over there.
Okay, time for a quick break. Stick around. We'll delve deeper into today's market movements, as well as talk about specific stocks on the other side. Stay tuned. Welcome back. You're watching India Market Close here on NDTV Profit. And what is a setback? What is in a setback for mining companies? The Supreme Court ruled that states can tax mineral rights and mineral-bearing land retrospectively. Mihika joins us with more details. Mihika, talk to us about impact on metal companies because they're clearly melting in trade today.
Yes, a little bit of background on the latest ruling. Now, tax on mineral wealth will be applied retrospectively, like you said. That means that the tax will be liable to previous periods, and companies will have to pay these taxes to the states at the set levels by the state governments. Now, they have to pay taxes liable from 2005 to July 25th of 2024, and the states will be able to collect the tax over a period of 12 years in a staggered payment method. Now, when you talk about the impact, one on the PSU sector, now solicitors had mentioned that the impact could be of 70,000 to 80,000 crores. However, this does include interest and penalties, which the Supreme Court has stated will not be charged. This stands negative for companies like Coal India, Hindustan Zinc, NMDC, Hindustan Copper, MOIL, NALCO, NMDC Steel, as well as Steel Authority of India. When you look at the private players, well, advocates have stated that they expect a demand upwards of 1 lakh crores. Tata Steel has already provided contingent liability of 17,347 crores, and this stands negative for players like Vedanta, Hindalco Industries, JSW Steel, Tata Steel, as well as cement firms like Ultratech, Cement, Shree Cements, ACC, who do have mining operations when it comes to limestone. And lastly, when you talk about who benefits, well, it's the mineral-rich states. Now, this includes Odisha, Jharkhand, Rajasthan, Tamil Nadu, Chhattisgarh, Maharashtra, Madhya Pradesh, West Bengal, UP, Assam, and also Delhi.
Okay. Thanks a lot for that, Mihika. Now, what to do in a scenario like this with some of the metal names, because various notes are out about what the current and the future impact might be. Somebody who's looks at this space for as close as anybody can, and for the longest time that I know, Rakesh Arora, founder of Go India Stocks, with us on the show. Rakesh, good having you. Thanks for joining in. Not that you needed it, but you would have had some time to digest this piece of news as well. Now, how big an impact? And is this also an impact on, maybe theoretically, the multiples? Because does this open up space for some more moves like this to happen?
So, Niraj, the mining industry in India was already kind of dead after the auction regime came in. And we saw what kind of premiums companies have bid. And now over that, there's further taxation coming in. So India already had India was already one of the highest, taxed mining industry. And now this is an additional impact. What it appears to me is that, while retrospectively there are some big numbers, overall impact is around 2 lakh crore. And they might be diluted a little bit down because penalty and interest is waived off and it has to be paid in 12 years. But going forward, whenever this industry is making any kind of profit, I think state governments can come in and increase tax. So that's a big overhang. And the stocks were under a little bit of pressure already because globally things are not looking that great for demand. And now this is an additional thing to contend with. Stocks are not cheap, so probably they'll drift downwards.
Okay. Now, you were already making this point about, Rakesh, the last time that we spoke about commodity prices likely to come off as well because of the global demand scenario. And I remember you telling me that no amount of good news can really match up for the bad news that comes in when metals correct. My question to you is, this plus a potential metal correction, is it only a drift lower, or do you reckon that there could be a sharp move lower as well possible?
So, Niraj, like a stock like Tata Steel already corrected from 180 to 140 odd. So that drift is already starting to happen. Given the buoyancy in Indian market and, optically these stocks look cheap as compared to the market, and retail investors are too much buoyant. So maybe it's a slow drift downward. I don't think they'll crack as much, as we expected. But it will be slow drift downwards.
Rakesh, Hersh also joining in. Good afternoon. Just want to understand, what this means for the wider market and for any kind of business in India. Because tax, of course, the uncertainty that comes with it whether from government or from all the conciliation that happens in courts. Either way, there is a bit of tax uncertainty in India. Does this basically deter investors as well as promoters from doing business, just from a perspective that you can have a tax come in at any point of time?
No, this has not come out of the blue, Niraj. The thing is, this case was going on for last 2-3 decades, and it's only now that the final judgment has come, and it's a delayed justice, that I would say. It's not a typical retrospective, tax. The case was already going on in the courts, and the final decision has just come now. So I don't think it will have too much of bearing. But obviously, businesses will have to be cognizant that if there's certain cases like this in the court, they need to be making some, contingent provisions for those kind of things.
Sure, point taken, Rakesh. Thank you for this quick conversation with regard to the mining counters and what impact it would have on the industry as a whole. Thanks for that. Let me also quickly bring on board Aditya Shah, Hercules Advisors, the founder of Hercules Advisors. Aditya, your quick take with regard to some of these mining and metal counters, which do you believe, if at all you have a study, which would be the most impacted in your view?
So Harsh, I don't have a study per se on this, but this is very negative in the sense that the retrospective taxation is not something that is really great, and it has the power to affect the entire mining investments as well as bigger investments that come into India. So really very negative, and you have to wait and watch until the next month to figure out what are the next moves from the government, and then take a call on where you want to invest first.
Ruchit, based on the moves that have happened today, any metal name that stands out for a trade?
So I think overall the sector has went through a corrective phase, but one name which has relatively outperformed among these names is JSW Steel. If you look at the percentage of correction from the high compared to the other names, I think this is where the least percentage correction has been there. And the major important supports from midterm, which is 850, 860 are still intact. So I think in case if not immediately, but going ahead, if we see any kind of resumption of a positive momentum or a short covering move within the metal names, then I think JSW Steel would stand out considering its outperformance when other stocks are falling.
Okay. Aditya, I want to quickly flip the switch, take it across with regard to your views, quick ones on Hero Moto, because the stock is under quite a bit of pressure. What's your sense at this point? Does it have value given rural recovery?
Harsh, I'm not so positive per se on Hero MotoCorp. The strategy seems to be confused even on the EV side of it, where of course their investment in Ather is really great, but their own investment in EV is not doing that well according to me. So in my opinion, companies like TVS Motors have stolen a march, companies like Eicher Motors within the OEM space, and even for that matter, Bajaj Auto have also done really well. And nothing against Hero, they will also do really well. But in the pecking order, I will have TVS Motors as number 1, Eicher as 2, Bajaj as 3, and then finally I will give Hero Moto.
3% lower, and a bit later on we'll of course talk about Hero as well in detail. The other one is Aditya, what's happened to some of the hospital names, right? We saw a half decent performance from Fortis. Apollo has been quiet too in trade today. Nothing that dramatic that came in there. In fact, some of the diagnostic names had better numbers. Any thoughts on the hospitals or the diagnostic businesses?
So within the two businesses, the valuation of hospital chains across the board is really very expensive. Many of these stocks have run up. My preferences would be towards the diagnostic space. Somebody like a Krishna Diagnostic, which works on the B2C segment and is reporting a growth of at least 25 to 30%. That is where you could really look at. You could also look at somebody like a Narayana Health, where they are doing extremely well per se. So the preference shift has shifted towards the diagnostic and the API space within the pharma sector, and to some extent to the CRAM CDMO space as well. Avoid on the generic space where the stocks are really very expensive. and on the hospital space where the valuations need to cool off a little bit.
Okay, well, so much more to talk about. We need to slip into a break, though. As we hit that break, though, as we talk about hospitals, here are the view coming in from Apollo Hospital, Sunita Reddy, talking about the outlook for the coming quarter and more.
Yes, so there is room for improvement, and I think that what we're looking at is, better asset utilization and some compression in cost to deliver better EBITDA margins. And for 24/7, I think the opportunity is huge, because post a slightly quiet quarter where we had elections and a heat wave, I think they're ramping up really well. So they will be back on track to 20% growth. And in Apollo Health and Lifestyles, we are seeing diagnostics growing very fast, along with our centers of Cradle and Spectra, which opened in New Delhi, also breaking even. Yes, I mean, without giving too much of a forward-looking statement, let me just say that our ambition is to reach at least 1,200 crores of a GMV every quarter for the next year, and it will be profitable. So that, I think, is a good ambition to have, and we are on track to deliver that.
All right, back with India market close right here on NDTV Profit. Not a bad day. I mean, just kind of meandering along. Are the F&O markets giving any kind of cues? Agam is standing by to break down those for us. Agam, how's the afternoon looking?
Surprisingly quiet one, to be honest, because today was the weekly Nifty and the Bank Nifty options expiry. And while there were expectations of choppiness, we were bereft of any at all. If you actually look at the kind of range that we're seeing for both these benchmarks, it was more or less in a very, very tight range. So, well, the Nifty for now, of course, is as flat as it was. And we've seen more unwinding coming through. For the Bank Nifty, again, the picture isn't very different. And the focus, I reckon, would again be on the options market. It's taking a decline. I was moved out, seeing a decline around 0.25%. But when it comes to the options market, and perhaps now that we are looking at an end to this particular expiry, naturally we're seeing a lot more traction around the 24,100, 24,000, well, calls and puts. But Bank Nifty, on the other hand, has been hanging around between 49,700 and 49,800, and that's exactly once again where we are seeing a little bit more traction coming in. In terms of stocks, of course, there has been mixed cues coming in, but more losers. So a lot of weakness in something like a Piramal Enterprises, Hindustan Copper, Hero MotoCorp as well, looking at a lot of selling coming through. And among stocks which are seeing unwinding, let's pull that list up as well to see where there is in fact decline in open interest. So something like an Aarti Industries is taking a knock of another 3%, as is the case for ABB as well. And well, it does seem like Trent is one of those few counters which is once again trying to inch up higher. But for now, a mixed market, a mixed day of trade there, and well, a quiet one for the benchmark indices.
Well, quiet day of trade for the benchmarks just on the eve of India's Independence Day, 78th. Now, let me take it to one counter which isn't doing too well in trade today. Auto major, Hero Moto, remains in focus. Company reported strong Q1 numbers. Puneet joins us with the key takeaways and con-call highlights. Puneet, stock down 3.5%.
Well, thanks for that. So, it's been a good quarter one for Hero MotoCorp, which is generally a subdued quarter because of, it's a pre-Kharif quarter. Revenue growth was 16% and EBITDA and profitability grew by roughly 21 to 36%. One thing to caveat is to know that there was a one-time expense impact of roughly 150 odd crores in the same time last year, which was the impact for a VRS or retirement scheme which the eligible employees participated in. Apart from that, in this particular quarter, it is the highest ever, quarterly revenue crossed 10,000 crores for the first time, as well as profitability has been the highest ever as well in a particular quarter. What's key here is the volume growth in this particular quarter. The number was already known, 13%, which is, as I said, a pre-Kharif quarter, and June was a very surprisingly positive month for, the auto major. Now, it has also confirmed what we had spoken and heard about from TCS as well as Bajaj, that there is a rural recovery which is higher than the urban markets in this particular quarter, and that seems to be a final, a trend that seems could pick up and be very positive for Hero. Specifically on the con call, they didn't mention about the multiple launches that are planned in this particular year. Apart from the 3 launches of the Harley Davidson as well as the Maverick in the last year, as well as the Charisma, they are expecting another launch in the premium segment, the 125cc segment, which has been one of the biggest growth drivers for all companies. The Extreme is going to be one of the most powerful products for Hero going forward, and they are also expecting a couple of scooter launches in the 125 and the 160cc space to drive the growth forward as well. The good thing is that it will finally, the new product, the EV product, Vida, will finally be, the new variant will be PLI compliant, and consumers as well as the companies will get benefit of this particular trend going forward, especially since we've seen a 50% reduction from the FAME 2. So overall, the momentum and start of FY25 has been strong for Hero. Let's see if it can get independent from the lags of the last couple of years that it has seen. Valuation also at 20 times price to earnings 2 years forward is very, very, couldn't say cheap, but much lower than Bajaj as well as TVS, which are trading at 25 and 30 times. Back to you.
Okay, Ruchit, thanks for that, Puneet. Ruchit, how does Hero look on charts? 3.5% lower. Is this, would you wager a trade, buy or sell at this point?
The prices have already seen a correction along with the market since in last 2 or 3 weeks. The recent swing high just about a month ago was around 5,860. And from that, the stock is now trading somewhere around 5,060 now. But if I look at the weekly charts, then it seems that the price-wise correction may be limited from here on, but there could be some time-wise correction as the momentum readings, which were a bit overbought, they are getting cooled off. So broadly, I think there should be a range of 4,750 to 4,800 on the lower side, and 5,300, 5,400 range on the high side. So expect some time-wise correction. In case if we see any kind of correction where the prices come towards the lower end of the range, around 4,750, 4,800, then the risk-reward ratio would turn favorable to take some contra buys over there. So buy and dip strategy should be kept. There's no trade setup over here, but yes, any declines towards that 4,800, 4,750 range would be a good opportunity to buy over there.
All right. Let me switch focus to some of the gold financiers. They're in focus because of their numbers and, very strong numbers in terms of growth. Pretty much their full year guidance, maybe they're 60 to 70% there, 75% for Muthoot specifically. The full year guidance met in terms of growth. Aditya, you track this space closely. Such strong growth, is it largely because IIFL has stood out? or their loan, basically their loan portfolio has been embargoed by the RBI, or do you believe that gold as a segment has just come back strongly because of gold prices? Is that what it is? Talk to us about those trends, and would you buy into any of these counters to play gold?
Exactly. As the gold prices have starting to move up, a lot of gold financiers are finding it advantageous to push the gold loan growth per se. And we've not only seen the NBFCs report strong loan growth in gold, we've seen companies like Federal Bank, companies like CSB Bank report very strong numbers on loan growth, specifically for gold. So I'm not too much concerned. So from that perspective, I'm positive on the gold finances. Specifically, in the order of my preference would be number one would be Federal Bank, number two would be CSB Bank, then would come Muthoot Finance, and then finally Manappuram Finance.
Okay, and what about something like a Piramal Enterprises? Again, the growth number was extremely strong.
So for Piramal Finance, what is really happening is they are pushing on to the retail loan growth, and the retail loan growth is about 30-40%. So from my perspective, retail is a place where a lot of NPAs are coming about. So we need to clearly see over the future how Piramal Enterprises future shapes about. So right now I'm very cautious on Piramal Enterprise.
Okay, and what about something like a Sammaan Capital? You know, they've revamped their name, that is one. Second, they're trading at quite a decent valuation. And you know, their profitability is at a multi-quarter, in fact, probably an all-time high, if I'm not wrong, with regard to quarterly profit after tax. Have they put their woes behind them? Is this a counter you would really want to look at?
Hersh, I have not been tracking the stock lately, so would not be able to comment on it.
Sure. Ruchit, within the NBFC space, especially gold financiers, we got quite a few names, and outside of that, something like a Piramal Enterprises, some smaller NBFCs. Any names that ring a bell for you?
I think within the entire space, if you see, then Manappuram Finance is one of the stock where positional chart sectors are positive. But again, not a short-term trading idea, because in the near term, we are witnessing some sort of consolidation happening in the stock. But downside seems to be very limited here on 180, 185 last time when the stock witnessed a dip towards that range. We witnessed a good buying interest over there in the stock. So I think here the price-wise correction seems to be limited for Manappuram Finance. So a gradual buying could be done if one is looking from a positional perspective of maybe 2 to 3 quarters, where at current levels one can look to add some positions and keep room to average in case if we get any dips towards that 180 mark.
You know, the stock which looks slightly wobbly today amongst pharmaceuticals is Divi's, and the Entresto generic entry in the offing earlier than anticipated is effectively negative for Divi's. Now, Ruchit, what do the charts say here? I mean, can somebody initiate a fresh short trade on Divi's?
So yes, I think the stock has entered a corrective phase now. Now one thing is that in last few trading sessions, this entire up move, the 20 DMA was acting as a support which has been broken today. So there is a possibility of some short-term correction getting extended towards 4400 mark, where the next support zone is soon. So at current levels, one can initiate fresh shorts. Stop loss would come over above 4800, and potential targets in the near term would be around 4400.
Okay, so that's on Divi's. Aditya, what about you? I mean, had done well around the result season, but this Entresto generic entry is seemingly being seen negative. Is a 4-5% cut enough, or could there be more?
There could be more cut per se. I think the stock could head around to about the levels of 4,200 or even 4,000. But over a longer period of time, they have enough amount of innovation coming through the custom synthesis business that the company will wave off this ride and continue to move forward. So I am positive on the stock. If somebody is a long-term investor with a view of 3 to 5 years, they can start to look at this.
Okay. That's one view. You know what, Aditya, what about some of the tech names? Today, PB Fintech was up, I think, 9-10%. Currently, too, I think, should be up about 4-5%. The last time that I checked, about 6%. Paytm is up about 6%, 5-6% as well today. What's your view? They're all diverse businesses, but what's your view here?
So let's first talk about Paytm. I think that the problems for Paytm are now really over. Now the market will try to see how fast they can really move up and they can scale up their lending business. So that's what the game with Paytm really is. Very highly risk-taking investors should only invest in Paytm because the business model is undergoing a serious transformation in Paytm, and it will require at least about 6 to 12 months minimum for them to get their recalibration right. So on Paytm, be very careful. You can get caught out on any negative news that can come up. On PB FinTech, of course, they are doing pretty well. The health insurance business per se is doing pretty well. And if there is a GST cut on health insurance to about 5% over the next GST Council meeting, then that could also be really positive for them. However, the stock is really very expensive. On bouts of any correction, I would suggest to add. So completely different business model. One is doing extremely well in their own business, very dominant. Other Paytm is undergoing a transformation. So I will advise to wait and watch on what happens with Paytm.
Right. Aditya, Marksans Pharma, that's one name I wanted to quickly pick out because strong numbers, but 14% move on the stock. What's your sense?
Hersh, I am not tracking the stock, so will not be able to comment on.
Okay, Ruchit, could you give us your view with regard to this one on charts?
The chart structure looks quite positive. A high top, high bottom structure has been seen, and the good thing is that in today's 14% up, if you look at its volumes compared to the daily volume, it usually sees the volumes are quite high. So this is just an indication of the resumption of the broader uptrend. And if you put some retracements of the recent correction, then it indicates a potential targets of around 230 to 235 range in the near term. So possibly the stock should continue its uptrend. Now for fresh buying, the stop losses are too deep. Today it's already up 14%. The support major is coming around 194, 195 kind of range. So I won't suggest fresh buying over here. But yes, if you get any kind of dips near the supports in the near future, then one should use those dips as a buying opportunity, and existing long positions should be held on.
Okay. Aditya, some bit of positivity on IT, I understand, aided by global as well. But what's the sense like? Because there is a little bit of skepticism on a possible US recession. And if that were to play out, wouldn't that adversely impact some of the Indian IT companies? What's the sense there on that count? And how constructive are you on IT at this point, given valuations have run up quite a bit?
So Harsh, I previously expected that by the end of 2024, things should start to get better and better for IT companies. However, that base case is not playing out, and we could see the first half of next year as well go into a slowdown for all of these IT companies per se. So that's the major growth challenge that all of these IT companies are really facing. Having said that, none of these valuations are still really very cheap. So you need to be really very cautious. Within the large cap IT space, you can look at somebody like an HCL Tech, an Infosys, or a TCS. Within the mid cap IT space, stocks are even more expensive, and you have to be really very careful. Somebody like a KPIT or L&T Infotech, Mindtree, or an L&T Technology Services. These are the type of companies that you need to really look at. However, valuations, again, as I said, are not really very cheap.
Okay. Now, last 15 minutes of trade left. Want to talk about some pockets which have been, from a results perspective, slightly mixed, if you will. Ruchit, I'll first get to you. Yesterday, we saw quite a bit of a gash into an RT Industries. Some of the others that have come in the recent past too have disappointed. Anupam Rasayan today, a case in point, relative to estimates, didn't have a great day. And the gashes in some of the stocks have been pretty stiff too. From amongst that chemical space, Ruchit, I'll to you first. Anything on the charts that looks like more weak, or may have bottomed out because the falls may be temporary? Anything at all?
So Niraj, there's a very sharp correction yesterday in many of these chemical names we saw, but I think stocks such as RT Industries, which have seen a very high volume-based selling yesterday, I think that name would continue to underperform in the near term, because whenever we see selling which is supported by higher volumes, then those stocks take a time to bottom out. But I think within the entire basket, EI Industries is one stock where the positional trend is quite strong. Although even this stock has corrected from its high in last 3 or 4 trading sessions, but the kind of volumes that we have witnessed in correction in some of the other names, EI Industries have not seen any kind of volume-based correction. And secondly, if you look at relative outperformance in the recent up move in most of the chemical names, PI was one of the stocks which has shown a decent outperformance compared to others. So I think this one is looking quite positive if one is looking from a positional perspective. Strong support around that 4,200 mark, a tad away from those levels. So in case if we get any kind of further weakness along with the other chemical names towards that 4,200, then I think PI would stand out compared to others.
Okay, some flashes on your screen before I come to Aditya Shah. It's MTNL. Very difficult to decipher what the base impact could be, but a stake sale in MTNL STPI IT services business and closure of unit Millennium Telecom as well as a pact with BSNL for 10 years. I believe sale of Mauritius subsidiary. So is MTNL doing the hard thing, which is getting out of some of the things which probably didn't yield too much results, and a service pact with BSNL for 10 years. Now, frankly, I do not have a sense of how beneficial this could be for MTNL. The stock is locked on upper circuit. You never know whether it is justified also or no, but it's certainly revving up in some excitement at the current point of time. Hersh, I don't know if you look at this business at all, and what do you make of this announcement for the pact with BSNL more importantly?
Frankly, very little clue, Niraj.
So let's put Aditya in the top hotspot.
Yeah, sure. So Aditya, let's go to you. Any view with regard to MTNL, this latest divestiture?
Yes, so the company is virtually bankrupt in the sense that they have defaulted on some some loans to one of the banks, and the stock price is doing what it is doing. So retail investors should refrain from speculating on stocks where the fundamentals are not really great, because once the market turns, you will find investors end up losing a lot of money here. So be very careful. And I would advise investors not to speculate on a company like MTNL where the fundamentals are completely destroyed.
Unless you know this, some of you might know this more than all of us out here put together. It's locked on upper circuits. I'm not going to ask Ruchit about the chart view here. It's had a good run in the recent past, but that notwithstanding, the limited point being the reason of this. I mean, and by the way, MTNL, what Aditya was saying, it went up all the way to 80 as well at a point of time, then came off to, look at that 1-1 chart. It's a mountain which is now again starting to go back, so who knows. But Aditya, I was talking about chemicals, the good results with companies like Deepak Nitrite or some others, and then Aarti and the fact that they said that they'll fail to meet the guidance on EBITDA. Now, it's a pocket that a lot of people have said is bottoming out. Things may look very good 1-2 quarters out. It's been being spoken about for the last 3 months. Is it time to look at chemicals, or would you wait for some numbers to show up?
Niraj, I am positive on chemicals, and I don't believe that the companies would start to report good numbers at least by the end of this year. I think the first half of next year would be the time when companies start to report good numbers overall. Companies here and there would start to report good numbers. For example, as you said, Deepak Nitrite reported a good set of numbers. PI Industries reported a good set of numbers. On the other hand, Aarti revoked its guidance, saying that they are increasingly facing pricing pressure. So chemicals is a very heterogeneous industry where you have to go company by company and then decide. Overall, as a basket, the stock prices are fairly decent enough that you can go ahead and invest there. However, the caveat being said there, it will take at least about 2 to 3 years for any meaningful returns to get generated from this entire sector. Within the fluorination space, within the phenolic space, where companies like Deepak Nitrite are performing extremely well, there are good opportunities available, but only for patient investors. It is not like you can generate returns over a bit of 6 to 12 months. Companies like Deepak Nitrite have given a return of about 50%. However, that is also starting to correct. So positive on the entire space, however, over a longer period of time of about 3 to 5 years.
Okay, Aditya, take point noted. Let's go across to Ruchit. Ruchit, before I come to you with my next query, let me quickly take your picks because we are around 10 minutes from close and it's a holiday tomorrow as well. So BTST, STBT.
Yeah, so considering that holiday and the event, the global event that we will see tonight, of US Fed, So I think one should not take very aggressive positions on either side. No, let we see how we open on the Friday. Then one should take an aggressive positions. But if one has to initiate any positions from a BTST perspective, then I would relatively play more safer, going long on ICICI Lombard. Because here the broader trend is quite strong in spite of recent market correction. The stock has not reacted much on the negative side. So only buying such stocks where the relative strength is there. So ICICI Lombard can be bought at current levels, keeping stop loss below 1930 for potential upside targets around 2070.
Okay, and Aditya, if I can come to you, just with regard to some of the play in power, how are you playing it? Because we've seen a tremendous run from some of the power companies. Say SJVN, Suzlon, talk about renewables, non-renewables, talk about transmission companies. Even a power grid has done phenomenally well. Is this space starting to look expensive to you, or do you have any ideas in this space, or how do you play this?
So yes, so Harsh, power is an exciting theme per se. Government is making massive changes within the solar energy space, within the wind energy space. As you say, Suzlon, the government has made massive changes that it had stopped the reverse auction, and closed envelope bidding was introduced, and a lot of these companies started to benefit out of it, and we've seen Suzlon on a massive uprise. So the sector is changing per se. Having said that, the stock market has priced a lot of that in, and one must be really very careful. My personal picks would be somebody like a Tata Power in this sector, or somebody like an IEX, where it is a power exchange, and exchange of power is happening really there. On companies like Suzlon, one needs to be really very careful. A lot of the rally has really happened. Companies like Vare, companies like KPI Energy, all of these companies are really, really very expensive and need to undergo a certain amount of time correction before they proceed on to their upward leg of next up move. So be very careful in this sector and try to pick very fundamentally strong companies where good balance sheets are available.
Okay. Fine. Thanks for that. Now, your more market views. Let's hear the view coming in from Macquarie Capital's Aditya Suresh, talking about how India will perform in comparison to Asian peers going forward.
In terms of an outlook, we are, as a market, set to improve from a 12% ROE outlook towards about a 16% number, which is constructive. Now, the significance of this is as what you were kind of pointing out, which is that I think quality stands out, right? So quality stands out as a support factor, and in particular, as a factor, it really stands out in the event of pullbacks more globally, right? So I think this would be a key characteristic which continues to be in India's favor. When you kind of overlay the fact that you have growth in the market as well, a lot of themes, so on and so forth, this entire quality compounding characteristic for the overall market will again, I think, be a support factor here for us right? Now, just on the premium in itself compared to emerging markets, today is about 300 basis points. By that, what I mean is, if India is at 16%, emerging markets, the expectation is about, say, 13%. That 300 basis points premium in itself is not too dissimilar from history, though. So whilst it is a support factor, Niraj, is it an explanatory factor to suggest why India is sitting at 22 times 2-year forward multiples? It's not. So it goes into the mix, but just on growth, just on returns, these are helpful, but they don't really tell you the full story. It still comes back to, at least empirically, when in the note we kind of go through this in detail, is that just in growth, just in returns, just in foreign flows, we can't really defend why, as a market, we should be at these levels. But then when you kind of think about the domestic liquidity piece, it then kind of comes together, and we can kind of, these valuations start to make more sense.
All right. That was Aditya Suresh of Macquarie. Let me stick with power, because that's a space which has done fairly well, of course, in pockets and silos. So we've had renewable energy doing very, very well now. Let's pull up something like a Suzlon. Let's pull up the Inox twins as well. SJVN is doing well in trade today after the numbers, 5% lower on Suzlon. So we're seeing a bit of a correction in this space. Now on the technical side of things, Ruchit, talk to us. What should one do in this space? Because we've seen a tremendous run-up now. But how is it looking on charts?
I think that's what the stocks have already run up in last few months. And the momentum readings, if I look on the weekly or the monthly chart, they are quite overbought still in spite of some of the recent consolidation. So I think one should wait and watch, not be in a hurry to create fresh longs over here. Maybe stocks such as SJVN, if we get any kind of decline towards 125, 130, the risk reward ratio would become favorable to create fresh longs there. Very difficult to take any chart view on Suzlon because the kind of run up the stock had, any kind of dips would witness some buying interest certainly in that stock. But no, frankly, I think not these levels where the risk reward ratio would become favorable for fresh buying. So if I have to choose anything, SJVN would be the preferred one, but not at these levels on corrections in the range of 130 to 125.
All right. Thanks for that, Ruchit. Aditya, any space, any pocket where you're finding value at this point? Maybe a couple of names.
Large private sector banks, ICICI Bank, HDFC Bank or Axis Bank, they look really very interesting to me. Somebody like CAMS, CDSL, they look very interesting to me. If you look at within the quick service restaurant, somebody like Burger King, they look very interesting to me. Chemical space, as I said, somebody like Aarti Industries after the correction looks very interesting. Somebody like an Apcotex or somebody like Vinati Organics looks very interesting. Again, longer term play, not a shorter term play person.
Got it. While you're on QSR, Aditya, last off, very quickly, 20 seconds maybe, Jubilant Food, what a strong set of numbers.
So good set of numbers. However, the stock is really very expensive, so I will. That would be my second or third pick person.
All right. So we're very close to close. Let's quickly pull out the Nifty 50 itself. See where that one's headed at close. Thank you both, Aditya and Ruchit, for joining us and giving us all of those insights. But quickly on to where we are, where the Nifty is concerned. We're just about flat. It's a flat close though. Nothing much to complain about, Niraj.
Nothing much to complain about. You're right, Hersh.
At least on the benchmark.
At least on the benchmark. And nothing much to complain on the Nifty Bank as well. Nifty IT as well. So that one's done okay. But frankly, you would argue that it's been a mixed day of trade with a flattish close. Even on VIX though, 4.5% lower, so that's not bad. And just the heat map will come up on your screen very quickly before we talk about the broader end of the spectrum. Even Stevens on the red versus the green. IT's hogged the limelight with TCS, HCL, Tech Mahindra, Infi amongst the top gainers. The losers include Divi's, which is ending 4% lower. Hero MotoCorp about 3.5%. Coal India, Ultratech are amongst the others that have slumped in trade. But really, the trend is only twin-pronged. The one is IT on the upside and Divi's and Hero on the downside on specific news.
Absolutely. Let's talk of the broader markets. Let's pull those up. Where are we? Well, we've been there pretty much for a larger part of the day, around 0.5, 0.6% lower on the Nifty mid-cap and small cap. Let's quickly pull up the advanced decline as well if we can. Try and see the breadth because it's been poor all day. So the broader end facing some amount of pain, whereas the benchmarks not as bad. Likely yesterday the benchmark, a large part of the pain yesterday was HDFC Bank, which honestly hasn't moved much today. So that's been the bit of relief that we've seen. There you go. Those are the contributors. And if we can also very quickly pull up the sectoral heat map and thereafter the BSE 500 top gainers, losers. Talk about sectors. Of course, IT has done well. And Niraj spoke about that. But Nifty Metal down around 1.2%. The ruling not helping, retrospective tax, mineral tax, which companies will have to pay to states. Nifty Pharma down around 0.8 odd percent. Last off on the BSE 500, the top gainers, losers. Big movers largely dominated by earnings, but outside of that, you can see some of the fintechs doing very, very well in trade today. Outside of that, you'll also see something like a Piramal, HEG, doing poorly on the back of, again, numbers. But you also have a Praj down around 4.5% sugar, which was a theme at least yesterday to some extent, seems to have reversed a little bit, along with PNC Infra, poor set of numbers declared earlier this week, down 5% in trade today as well. Suzlon on lower circuit as well. But with that, completely out of time on this edition of India Market Close. Wishing everyone a very, very happy Independence Day. Proud Indians sitting here. And from Niraj, myself, everyone who puts the show together, thanks so much for watching.